Okay, that's what I've done myself. Okay, I looked at the trend, so it can drop 117. I wouldn't be waiting till 102. Okay, definitely, or 134, like majority of you mentioned. And actually, as I already mentioned, I already opened the position because I saw this very nice green candle. I put the trade and it's open. It's already in profit. What I've done, I sold put. I got $3.5. At the moment, I can buy it back for $1. So if I want, I have the target price to buy at 70 cents. Who knows, maybe tonight I'm going to close it and fix it. I already have done it 2 times. First time I sold for $3.5. I bought it for 70 cents. I am doing it right again. Same price, everything, but different strike price. Okay, and if you're a long-term investor, and if you buy this company somewhere at those levels and hold it to 208 or above, remember those areas we identify that in up to 280 wait, and then already becomes overvalued. So you kind of trying to find a position to close that position and take the profit and reinvest into undervalued company. Okay, because otherwise, if you keep it, you have a risk of the company going all the way down again and do this cycle again. So now another strategy is roll strategy. It's more for active traders, where you know this company is good and you identify technically how technical analysts going to trade it, and you do exactly the same. And the majority of you put it that you can buy at 134 because several times within the last several months, the company actually went close to that level, 134, 133 to 135, somewhere there in this range. And then it moves to 146 to 160. Okay, so you can trade those levels. You can trade longer travel, 133 to 160, or you can trade 137 to 146. So it would be less profit, but you do it much faster. Okay, it's like a taxi driver. One taxi driver can sit and wait until somebody goes from here to Wollongong, and he takes only one ride a day, and he makes a lot of money, and is happy, right? Or maybe even one ride in a couple of days. But the other person will be riding from Rockdale to, I don't know, Central to Rockdale Central, and maybe does it several times a day, makes less money for each trade, for each trip, but in general might make more money. Okay, so you have to consider all the time. And then option strategies. We're going to look at option windows, but guys, again, you can see this red text. Remember, before you place any trade, you have to fully understand all possible outcomes of this trade. It's first, and remember, you invest your own money, okay? And you have to make your own decision and don't rely on anyone's opinions. And again, so if you have, for example, $20,000 in your account and you like this company and you decide to sell put, which we're going to look at, don't do that, because it means that you're breaking all the rules about the portfolio management. You have to diversify your portfolio, and even if you like this company a lot, you still have to have, let's say, not more than like say 20% of the stock in your portfolio. So if you have $20,000, you might have only $4,000 invested in the stock, because this stock cost $140 in average. So you understand that you can buy only around 30 shares. So you cannot trade options. You just buy and sell stock. That's how you can distinguish your strategy. Okay. Now, for those guys who have bigger portfolios, if you have $100,000 or more in your portfolio, so 20% it would be 20,000. So even if you go for one contract of this particular stock, like puts, you know that you are kind of investing about $14,000, so which is okay for your level of portfolio. So you have to take like always keep it in mind, right? So let's have a look at selling covered calls or selling puts. There would be different for guys who don't understand that. Probably just relax and trying to see how we can make money. So it's like more rented strategy, but that would be very interesting for you to see how much money you actually can make. Now, at the moment, the price is just a second. I move it down. Okay. In any way, the price is close to $135. So if we sell put until this Friday, so what we are, for those who don't know, what we are going to do is to promise somebody that we're going to buy them for 135 within the next 4 days or 3 days, which is left, right? And they're going to pay us $2.10. This price was on Friday. Maybe when the market opens, it would be less, but this is kind of how we get it. So $2. it would be time value, because like 20 cents is difference, real difference, maybe 190. So what's the percentage is that? So how much in profit? So if we get $190 time value, right? And what happens if the share price stays above $135? What's the percentage income for these 3 days? We can calculate quickly. 190 and 134. So it's about 1.5%, right? Close to 1.5% you can make within next 4 days just to sell input. Okay. Now, if you go for 1.5 week duration, you can get $3 here net profit. So which gives you more than 2%, 2.2% roughly. Okay. So if you do it until next week, and if you do it for 1 month, yes, I can. Actually, I sold it until January 22. So, but it's already, I sold it earlier last week. So it's similar to way, and I also sold a bit in the money. Okay, at the moment, I think it was 133 when it dropped down. So I sold it maybe even 132. So, and now it's, you see, it's only, maybe this one, maybe 133. I just don't remember now. I have to have a look at my account. I sold it for 3.5, but now it's much less. So probably I can buy it for this level. So if you go, for instance, you see 135, you can get $3 until next week. And if the share price, you see delta is 50 cents. So if the price of the stock moves, would say $3 up, so you can buy it back for roughly $1.20 or something like that. 150, and it can move within 1 day $3 very easily. It's very, very volatile. If you, okay, if you go for 1 month, you can get $5 here time value, okay, which is giving you about what, close to 4%, right? It is options. Yeah, it is a option. Now, this is if we sell puts. So we can get from 1.5%, 1.6% within 3 days up to 4% a month, right? It depends on your strategy. Okay, so if you're busy, you probably go for a month. If you're not that busy, you probably do it every week and you generate much more money. Okay, now let's have a look if we buy option. That's what we can see. I put here, guys, for you 3 expiration dates, so until July, until September, and until January 2022. And again, just in order to evaluate it, and I'm going to ask you now in a second, if we buy call, leap call, until July, we're going to pay $12.80. So it's roughly 9%. Okay, if we go in for September, we're going to pay $16, and look at the spread. Spread is huge, $3 practically. And if we're doing it for January 2022, we're going to pay $17. The question is for you guys, is it expensive or not? Are options expensive to buy? 15% for 1 year, 10% for 6 months. I would say it's a bit expensive, and I would prefer to sell options here rather than buy. Although if you look at profitability level, which you can generate here, and even if you buy at the money, just I wouldn't buy at the money, but even if you calculate the profitability with at the money, and would say if I go for July, which is 6 months, okay, and I pay $12 here, and then we expect that the price can go from 135 to 160. Let's say if during that period of time the share price goes this $15 up, how much money we're going to make? With the delta 50, at least we're going to make $7.5, at least. So by investing $12 and making $7.5, and that's minimum you're going to make, so you're going to get around 60% profitability. But because the delta is going to change during that period of time and can go all the way to 70 or nearly close to 1, you're going to make much more of that. So you might make $10 on a $12 investment, which is up to 80%. Okay, so this is how it works. even if the price is for options quite high, you can make this money, but be careful, right? Because volatility after earnings can drop down and the price can shrink. Options are, yes, complicated, so you have to understand it. Options, we actually ran the program recently, and Olga probably can tell about, she is here and maybe someone else from that program, how they enjoy the, this kind of education. All right, guys, do you have any idea if you decided to put this, this trade, what would you do now? So would you buy shares? Will you sell puts or will you buy calls? Guys who don't know options, of course, disregard this question, and it stays only one strategy for you. It's to buy shares and sell shares. That's it. That you don't know anything else. But for those who kind of more advanced already, you understand, what would you do? Will you buy calls based on the current price? Will you sell puts or will you buy and sell shares? What will you do? Can you write down? All right, everyone is now the most important part. The decision is the part of the decision. Actually, interesting enough, I remember when I first was started investing, and my friends, they also started investing, and a lot of them, they actually will come to my office and they ask, Igor, can you press the button for us? Help us to press the button, because it was scary. Okay. Something like that. Olga is right. My life become much more interesting since I got the knowledge of options. That's cool, right? You know what to do at 6 o'clock in the morning now, correct? All right.